Hi, Natalie. Thank you very much for joining us today. How are things in St. Louis?
Oh, thanks for having me. Things are really good, busy as always.
So, Natalie, the last time we spoke, you were busy preparing for the Bitcoin conference in Nashville, and I want to get some feedback on it. How was the conference? What was the attendance like, and what was the mood like?
It was a fantastic event. The energy was electric. More than 20,000 attendees. We filled the room in the main hall for the keynote speakers, which had a capacity of about 8,000 people, I believe. And they were coming out to see a lot of political candidates and presidential candidates talk about Bitcoin for the first time. So the conference actually felt like an inflection point. It felt different than prior events just because of the political attention. Having Trump come out and say that he wanted to embrace Bitcoin, potentially create a U.S. strategic reserve for Bitcoin, was just not what I had on my bingo card at the beginning of the year. And RFK Jr. returned again, and there were just lots of great speakers, as always, talking about the mission of Bitcoin, making sure that it is inclusive for everyone so that people understand that this isn't a left or a right issue. It's not a Democrat versus Republican. It's actually we all need to embrace this new technology because it will empower the average individual, and hopefully in the future maybe hold the government a little bit more accountable when it comes to spending and its fiscal responsibility. So, yeah, it was a great event.
I don't think that's possible to hold the government accountable.
I do
So,
if you fix the money. I really do believe that. I think when the incentives are so broken and money can be manipulated and money tends to pool with a small amount of people that create very powerful special interest groups, then I think I can understand why people see no hope in the future. But when there is a more level playing field where everyone has to play by the same rules and no one can manipulate it, no one can, benefit from being closer to a money printer that doesn't exist, I think we can actually address some of those issues.
and you said there was 20,000 people there. How does that number compare to last year's conference, which was in Miami?
Yeah, I think it was actually a higher count than last year, especially because we were still in the midst of a bear market in 2023. So it definitely felt different, especially since this year the price has gone up at least 100% since last year. So it was definitely feeling that excitement about Bitcoin sort of being back in line with the prices we were expecting. But we've still got a ways to go. Definitely doesn't feel like the 2021 bull market yet, where things were really just really intense with people's price predictions and thinking that we were going to go to six figures. I think right now we've got a lot of macro headwinds and a lot of things that are happening that are outside of Bitcoin's, the control of Bitcoiners that are preventing it from reaching higher highs.
So why don't we talk a little bit about that because there are so many tailwinds too that are in favor of Bitcoin and other cryptocurrencies. And recently, Morgan Stanley, for example, came out and they're the first major bank to say that its 15,000 financial advisors can recommend Bitcoin. And so that's a big tailwind. So why aren't we seeing a more positive move in Bitcoin?
Well, I think when it comes to the ETF adoption by institutions, it's just going to be a slower process because many of these firms, some of them have charters where they have to go through at least a 6-month process in order to vet and decide if they can allocate to this new type of investment vehicle. I think a lot of pension funds are starting to steer the ship in a different direction, but there's a difference between really well-funded pension funds and the ones that have a lot of trouble and how much risk they're willing to take, because a lot of the interest so far, at least at the beginning of the year for these ETFs, did come from retail. But the 13F filings that were just turned into the SEC last week, they do show that more and more institutions are allocating to Bitcoin. And it is a lot of investment managers as well as hedge funds. So we'll see, because hedge funds tend to be more traders rather than long-term investors, whereas investment managers tend to see things more long-term on behalf of their clients. So I think this is just going to be like a slower process. And I do agree with the analysts that say Bitcoin feels a bit like a coiled spring, and there is kind of a huge momentum that could send it up if the right factors were to be in place. But Bitcoin has largely been correlated with liquidity. And if you watch my show and you listen to the analysts that I speak with, that has been a recurring theme. Is just when liquidity increases, when the monetary supply expands, when they're ready to expand the balance sheet again, Bitcoin does really well in that environment. And I think we're turning a corner where, we're probably only a month or two away from rate cuts. They're going to have to expand the balance sheet, and the federal government is expecting that in 2025. So I agree with the people that forecast 2025 being a better year for Bitcoin reaching new highs.
So why don't we discuss the benefits of owning Bitcoin? If I was a client of a financial advisor at Morgan Stanley, why don't you just take me through why I should have an allocation in my portfolio toward it? This interview is sponsored by Aura. In addition to being very concerned about the economy and how it's going to impact my financial future, I'm also concerned with identity theft. Did you know that AT&T recently announced that it had a data breach of 73 million customers? Ticketmaster, a website I use all the time, was hacked, exposing over 500 million customers, including their emails, phone numbers, addresses, and financial data. In 2022, Americans lost over $10 billion to online crime. So how do we protect ourselves in this digital world that we all live in? Aura provides identity theft and fraud protection for your finances, your personal identity, and also your family. To learn more about Aura and how it can protect you, simply click on the link below, aura.com/Bloor Street Capital to start your free 14-day trial. The 14-day trial includes identity protection, transaction monitoring, scam call protection, antivirus, and so many more benefits that will protect you and your family. Once again, aura.com/Bloor Street Capital to start your free 14-day trial. Now back to the interview.
Well, I would say that the first thing that stands out is just it's the best performing asset of the last decade. And if you just zoom out and look at the performance since 2020 and you compare it to real estate stock indices like the S&P 500 or gold, it has outperformed all of them. So yes, it's volatile in the short term, but that volatility has led to outsized gains, especially when you zoom out and you hold it for the long term. It's just performing better than any other investment. And if you really understand it, if you go, you do the homework and you understand the protocol and how mining works, then I think that you start to see it as really the least risky thing that you want to own, when everything else is based on a fiat currency system that can be highly manipulated, and different investment classes where the supply can generally be increased, maybe not super easily, but overall it can be. More shares can always be issued, more homes can be built. Gold obviously is mined, and we don't even know how much gold is out there. Maybe they'll find some on a meteor somewhere, but there will only ever be 21 million Bitcoin. So you're really securing your place on this global ledger. And now that we have the legitimization of both Wall Street as well as presidential candidates even vying for who loves Bitcoin more, I think we're moving in that direction of everyone's going to be embracing Bitcoin. So I think, a non-zero allocation is more than appropriate at this point. I know some people are going to be very conservative and start with maybe 1 to 5%, especially big institutions. But I think over the long run, especially with Bitcoin's price appreciating, it will make up larger and larger portions of people and institutions' portfolios.
And another reason a lot of people are behind Bitcoin and other cryptocurrencies is because of decentralization. In other words, it's not controlled by some government entity. But a lot of people are saying now that Bitcoin has come out with these ETFs, it is being controlled by a government entity, the SEC, and therefore we no longer have decentralization. What are your thoughts on that?
Yeah, no, I don't see it that way. The ETFs are an additional vehicle, and there are firms and organizations and pension funds, for example, that can't invest in spot Bitcoin, and they need a security version of it. So the ETFs are sort of perfect for that. It is different than owning spot Bitcoin, right? Because when you take custody, that is a form of the asset that cannot be seized, it cannot be confiscated, no one can weaponize it against you. Whereas if you trust a counterparty, just like in our current system, and something happens to that counterparty, or the federal government influences it, then potentially, you might be in for a situation where you can't access the funds in an easy way. But I don't see that being the future. I mean, I don't have a forecast of a draconian situation where people are not able to, let's say, transact with anything except centralized Bitcoin. I'm actually very hopeful about Bitcoin as a technology that will remain global. I think that the United States will at some point enact a certain threshold under which you can spend Bitcoin with no capital gains to encourage its use as a currency. And on the store of value side, it will continue to be one of the best savings technologies. But the network itself is decentralized. And whether the government purchases some or we have these ETF vehicles, it doesn't detract from the decentralization of the network. The nodes are spread around the entire world, and they enforce the rules. And the mining companies are located all over the world as well. And I just think that this is the most secure network that you can actually invest in. And it's almost like investing in a piece of the new internet. The internet of money is how I see it. I mean, back in the 90s when the internet was first taking off, none of us really could grasp how much it would change, not just the way we communicate, but the way we actually do business. And we've never had a digitally native currency that you could absolutely trust because it was decentralized. It had no point of failure. It wasn't run by any organization or government. And so now we finally have that. And I think it's going to revolutionize the digital economy that we're a part of in the future.
So many of the elements that you described for investing in Bitcoin are the same reasons investors would invest in gold. And quite often people refer to Bitcoin as the new gold or digital gold. But why do you prefer Bitcoin over gold?
Yeah, so I understand that gold has the track record for sure, but it does have defects, in my opinion, as an investment class because A, it is physical. B, we don't know how much exists out there. The other day, they found some mine and they were able to, excavate even more gold than they expected. We can't audit central bank reserves. We don't know who's actually holding how much. And the physical nature of it is also prohibitive to things like if you had to flee in an emergency, right? I mean, you can't take all of your physical gold with you on an airplane or across borders because of the laws and regulations that are in place, and literally because it's physical and you have to carry it. But you can memorize a seed phrase, 12 or 24 words, and literally go anywhere around the whole world with your wealth, which, maybe that's not something that we have to worry about here in the United States, but other people in other nations have absolutely had to worry about, especially in the last year as global geopolitical conflicts increase, and in areas where inflation is far worse than what we've experienced here in the US. So I like that it actually is digital in nature. I know that some people are skeptical of Bitcoin because it's just a digital ledger, but because it's secured by this global network of nodes and miners, I actually think it's a lot safer and a lot more reliable and verifiable than any kind of gold investment. Gold has gotten to be very centralized, and there's a reason central banks are buying more of it, and there's a reason why they have tended to pool in nation state reserves. And I think that that's a vulnerability, and you can't move gold at the speed of light globally for pennies on the dollar. So I think we're moving into a world of digital money, and I think Bitcoin is the best version.
I'll tell you one thing I like about gold that you can't do with Bitcoin. I like to hold it in my hand. I love holding gold in my hand. But
Yeah, okay.
you raised a lot of interesting points there. I guess the other thing that comes to my mind too is the demographic associated with the two asset classes, right? So I've been to a lot of gold conferences. I've gone to a lot of Bitcoin conferences, and the demographics are just totally different, right? A lot of the people walking around at these gold conferences are 60s, 70s, maybe older. Whereas when you go to a Bitcoin conference, as you are well aware, they're in their 20s and 30s. And how do you think this is going to come into play with both Bitcoin and gold?
Well, I just think about any technology, right? Because money is a form of technology and it has evolved. And one of the reasons that we got to fiat currency is because of the limitations and defects of gold, because it was difficult to transport. And basically, it ended up getting centralized in both individual or commercial banks as well as central banks. And they had to paper over it. And when you paper over it, that allows for a little bit of manipulation, maybe slow and small at first and growing larger and larger to the point where we are 35 trillion in debt, right? With nothing, without the gold in reserves to back it up. So I think that that is the kind of sore spot. That is the weakness. And Bitcoin, you don't have to worry about that because it is a globally verifiable network that settles. I mean, it provides instant settlement and you can verify all the transactions and the entire history of the entire ledger whenever you want. And I think that there's something really special and important about that. And so technology, as people grow older, as people expand their knowledge, obviously they move with technological trends, just like we moved from horses and buggies to cars, and we moved from sending snail mail to email. Things just evolve with the times, and people get more and more comfortable. And the great thing about Bitcoin is I know that sometimes for older generations, they see it as an obstacle because of its digital nature, but the second that they actually take the time to interact with it a little bit, it actually is far easier and simpler and very convenient than they expected. And that's really empowering. I think whenever you learn a new skill, you learn how to engage with a new technology, it's a very empowering force. And of course, younger generations might inherently like just grow up interacting with these technologies, so they find it easier and less intimidating. But anyone, I mean, Bitcoin is easy to access for everyone, and I always get really inspired when I see like passionate boomers for Bitcoin or grandparents that just set up their cold storage wallet. It literally is for everyone. But of course, with generational, as generations get older, the technology trends change and younger generations tend to adopt them before older.
Yeah, and I think this is one of the things that's really driving the performance in Bitcoin, right? You have these younger generations coming along, whereas the more traditional investors who used to invest in gold, they're dying off. So you have nobody coming along to pick up the torch. You mentioned central banks that have been very active in buying gold. I believe in 22 and 23, they have acquired 25% of all gold produced, believe it or not. So if you didn't have central bankers around, I kind of wonder where the price of gold would be. But do you think Bitcoin is overtaking gold, and is gold a dying asset class?
I mean, I think over the long run, it will take over gold's market cap. I think it will exceed it because people will see the benefits. Again, I mean, it has outperformed gold. If you held gold and Bitcoin from January 2020, you'd be doing a lot better with your Bitcoin. And I think that gold it's been more successful at maintaining the purchasing power of your dollars as opposed to really growing it and accumulating a lot of wealth. A lot of people have done that nowadays through real estate and indices, but I think that Bitcoin is a better investment than either of those, and I think it will outperform both stocks as well as real estate in the coming decades. And I think we are entering just kind of a global shift in our financial system when it comes to um, the value of real estate, the value of stocks. I think that commodities will perform a lot better than they have in the past. I think that energy will drive a lot of demand. I think that Bitcoin is obviously very closely tied with that. So is AI. And so I think that we're just entering into maybe a different shift. Before, it was very easy to just like close your eyes and passively invest and put your money in index fund or do the traditional 60/40 portfolio. And that's just not working anymore. And people are moving away from things like government bonds because they see, I mean, they're going to manipulate the interest rates. They're going to expand the money supply. And why would you be left holding the bag? So I think bonds are one of the worst investments. So I think people will start to change and shift. More active investing will happen with stock picking. Although, I mean, for me, I see that as a very time consuming in order to do all the research because you're inherently like trying to figure out which companies you're going to trust. And B, it's kind of a gamble. It's kind of a gamble. You don't know what's going to happen. You don't have all the inside information that you're going to need in order to perform as well as some of the best traders perform. And I think Bitcoin actually, alleviates all of that worry and concern because you're investing in a global protocol. You're investing in something that no one can manipulate, that no one can inflate, that no one can influence and change, and that you can literally take and use globally anywhere. So I think that investing is going to have some real shifts going forward, and I think that Bitcoin is one of the best things you can be holding right now.
Yeah, you raised a few good points there, and I think the one that really resonated with me was the fact that the 60/40 portfolio no longer works,
Yeah,
especially in this inflationary environment that
yeah,
just keeps going up by exponential amounts, and you need other investments to make up for this loss in purchasing power. And maybe that's Bitcoin, maybe it's gold, but it's not stocks and bonds by themselves, that is.
no.
So you mentioned about the market cap. So Bitcoin has a market cap of around 1.2 trillion. Gold, depending on whose research you look at, it's around 15 trillion. Ultimately, you see Bitcoin overtaking gold's market cap.
Yes, I do. I think there's going to be more demand over the next 2 decades for Bitcoin than gold. And I mean, you just kind of highlighted something that I find very interesting and poignant is like we don't even know the real market cap. We don't know exactly, right? It's like how much gold is there and how much does any entity have? We're not really sure. We can't pinpoint it to a very precise amount. Whereas with Bitcoin, you can because you know exactly how much is out there and anyone can access that information. So I think that it will eat into gold as well as into bonds. It will eat into real estate, and we have to consider those asset classes as being very significant because they're worth hundreds of trillions, some of them equities, and so for Bitcoin to just take a small piece of that as well as from gold, I mean the price appreciation is going to go very, very high from here.
Natalie, I want to ask you about halving now. This was a big event, I believe, back in April, but it's come and gone. And since that time, the price of Bitcoin has been stuck in this tight range, trading between $60,000 to $70,000. What's your take on this whole halving process, and why is Bitcoin not significantly higher?
Sure. So typically we see the greatest price appreciation about 6 to 12 months after a halving. And we've been chopping along sideways, I think largely because global liquidity hasn't moved significantly. We're just starting to take our way up and M2 money supply is starting to increase. And as I mentioned earlier, the Federal Reserve will need to come back in and start to expand the balance sheet. And all of that is very good for Bitcoin, for better, for worse. And I think that it's just faced a lot of macro headwinds in the face of higher interest rates, a lot of global uncertainty, a lot of people, moving their money into these short-term duration treasuries because the interest rates have been higher than before, and it's seen as risk-free. And we also had that crypto meltdown that we all recovered from, defrosting from the crypto winter took a while. But I think we're just kind of chopping along until we see more adoption of both the ETFs on an institutional side as that process is making its way through in terms of approvals and getting the sign-offs for these massive companies to be able to allocate. We still have some headwinds when it comes to, taxes, not being able to trade in kind for the ETFs, and fair accounting is in the process of changing. And then when it comes to retail, again, I just think that it's going to take number go up is what brings all the retail in. I've certainly experienced that producing content. All of a sudden, when the price starts to move, everyone piles in. Right now, you could get Bitcoin at discounted prices, but no one seems to care just yet. But once they start money printing, you're going to see Bitcoin perform very well in that environment.
So let's talk a little bit about the debt. You raised some very interesting points here, and you mentioned earlier that the debt levels are at $35 trillion. It's growing by $1 trillion every 100 days, which is a mind-boggling number. And even the interest rate or the interest expense on that debt, it's $1 trillion a year, and that's
Exactly.
going to keep growing, of course. But how does Bitcoin solve this? How does it provide a solution to this government mismanagement?
Well, I think that there are several answers to that. I mean, first, I want to start on the individual level because I think that that is so critical. I think one of the reasons why we're at a place of such polarization and frustration and populism is because the average individual is no longer empowered economically. The American dream used to be within reach. We had a very strong and robust middle class that was able to afford things like a home and retirement. And now we have a generation of people that have come up and they believe that they will never be able to own these things. And so there's kind of this lopsidedness where certain portions of the population are wealthy and totally fine with the increase in prices. In fact, they've benefited from aspects of inflation, and a huge chunk that are completely disenfranchised and don't know what to do. So first of all, I think returning the power, economic power to the individual to be able to save and plan for their future is the most critical because it will do the things that essentially having a strong, empowered middle class or working class does, which is that they can now buy stuff. They can buy houses and build houses and start businesses and invest in their communities and afford to send their kids to school. I mean, that is, I think, at the core. You need to empower the individual economically and not just continue to burden them with a system that steals from them at the core through inflation. And again, the very few benefit at the expense of everyone else. And then as you zoom out and you think about corporations and companies that people start, those becoming more economically empowered. So at the top range, you don't have companies that basically are zombies taking on so much corporate debt, and basically it's just to buy back their own shares to feed and pay their executive salaries. It's maybe a little bit more balanced, where it's based on the services and returning the value to the actual products and services that are provided by these companies, because we've seen a deterioration in that all across the board. And then when you go up to, the nation states, now nation states are impoverished in the sense that they just have to print money and go further and further into debt and place that burden on future generations. Why not economically empower them as well so that they can maybe focus on rebuilding infrastructure and investing in education and things that aren't just, guns and bullets and the imperial empire abroad. So I just think that when you zoom in and then start to zoom out in the ways that Bitcoin can empower people, because it's the best form of money, it's the thing that we can most trust because of its decentralization and security. I just think that it can usher in an era of real abundance. A lot of us think back on or have read in history about the Renaissance, right? How it was a time of flourishing and of amazing art that was created, of the banking system was flourishing, and people were able to start businesses, and there was a lot of economic growth and activity that seemed very organic. I think that we can have that again, and it could be this digital renaissance through Bitcoin. And I that's one of the reasons why I'm passionate about what I'm doing, because I think everyone needs to be empowered with sound money.
Yeah, you raised many interesting points here. And I think the one point that really stands out to me is, once again, the money printing, the inflation. And even though the government might say, hey, don't worry, inflation was at 9%, we got it down to 3%. But they always forget to tell you about the fact that since 2020, prices of everything are up 40 to 50%. And at the same time, our wages are only up 5 or 10%, right?
Yeah.
It's like impossible for anybody to get ahead. You're in
Yeah.
the US, I'm in Canada, and I can tell you it's even worse in Canada because we are
Yeah.
continuously being taxed on after tax dollars. It is virtually impossible to get ahead.
Well, but I heard that you don't have capital gains tax on your primary residence, whereas here in the US we do.
Yeah, yeah, but
So
we
people
have,
people get excited that their homes are going up in value, but they forget about the fact that, first of all, they've probably gotten a long mortgage on that, and they're paying a ton in terms of the interest over the years. And oh wait, your home is appreciating in value. You have to pay a ton of taxes if you sell it, only to move into another home that's completely overvalued and too expensive. And it's like no one can really get ahead very easily because you're just kind of treading water at the pace that they're inflating the money supply. And to your earlier point at the top of the question, what they say the CPI is not the reality that people are facing and witnessing when they go into stores, when they go to buy their groceries, when they go to buy a house. Everything has become so ridiculously expensive compared to what people are earning. And that's one of the things that I think has frustrated so many people, because when they hear leaders, political leaders saying that, oh, everything's come down and this is the strongest economy, that's total gaslighting, and the average person knows that that's not true. And so I think that they blame sometimes the problem on the wrong thing. We have to dig deeper and really understand that it's coming from the financial system itself and from central bank policy. And politics isn't going to necessarily fix that. It's actually removing politics from money, removing the state from its monopoly over money, and returning that power into an emergent money that comes from the free market and is a true vector for capitalism, which we haven't had in a very long time.
Yeah, so you mentioned the fact that we don't get taxed on capital gains on our primary residence. We do on us if you have a cottage, that gets taxed. But the other thing in the US, you can write off your interest expense. You can't do that in Canada. And something else that there's a real big difference between the US and here. In the US, you can enter into a 30-year mortgage. In
That's true.
Canada,
Yeah.
the most you can do is 5 years, right? So let's just
Wow.
say you got a mortgage back in 2019 or 2020 at, a low rate, let's just say 3%,
Yeah.
and then you go refinance it this year or next year, your
Oh,
interest
wow.
payments are going to double. Okay.
Yep. That's crazy.
Oh yeah. Yeah.
And
So
I mean, you're bringing up a great point, because so many people here during the pandemic and the stimulus programs that were enacted, they locked in these low interest rates. And I think that has prevented some of the economic collapse that we might have seen when they hiked interest rates, because a lot of people are sort of locked in. So they're not moving. And yet also they're preventing things from unwinding too much, because they secured such low interest rate loans a couple of years ago.
So the next 4 months are going to be quite interesting. I mean, there's this ongoing debate on whether or not the US is going into a recession. When is Powell going to cut interest rates? We've been talking about that for a year now. We have a major election coming up. What else should we be looking forward to in the coming months?
I mean, there's such a debate, right? And we will only know, I guess, in hindsight and looking back at the data, but there are signs of weakness everywhere. It's not just domestic, it's globally. Economic factors have been decelerating. Unemployment numbers are increasing. They have to revise the numbers because they've increased more than they expected. CPI has still remained elevated. We're in kind of uncharted territory with the amount of debt that we have. So I think that the Fed is going to try to thread the needle as best it can. But at the end of the day, we're here because we've printed too much money and we've been manipulated the system so much, and we don't allow the excess to wash out. We should have done that after the 0809 crisis. We could have maybe created sort of a more steady, strong foundation if we allowed things to really go under, if we allowed the big banks, some of them, to just fail. And instead we rushed in with the money printers. And that was great for the people at the top and not so great for everyone else. And now since then, every time they print, they have to print even more. And so you have to expand the credit more in order to achieve smaller and smaller amounts of real growth. And it is impacting everyone because, again, your wages are not keeping up with that rate of inflation. So you're experiencing, deflation almost in terms of your waging, your purchasing power, while everything around you gets more expensive. And so that doesn't end well, right? I mean, this is how we are getting to the popping of the ultimate bubble, which is at the sovereign debt level at this point. And so I think that the only measures that they are going to be able to take, because they're the only measures that are politically palatable, is to just print the money. And that's very dangerous because you don't want to end up with a Weimar Republic hyperinflation situation. And I just urge people to take responsibility of their own financial future by learning about Bitcoin, by learning why it's important to hold hard, scarce assets, because it's something they can't just print out of thin air. And I think that hard, scarce assets will perform extremely well in the next decade. I think that it's going to be more important, to shift the focus, not to the net consumers of everything that's created around the world, but the net producers. I think that the nations that are producing the energy and the commodities are going to fare well, especially with a situation where we're just all this debt is coming due. And yeah, I just want people to be empowered, because I think the average person doesn't think about this. And again, we're kind of looking to get saved or rescued by different political forces who ultimately have no choice but to print. And so whether we're in a recession or not, it doesn't really matter, because whether it's 6 months from now or a year or 2 years from now, they are going to have to come in and print money, devalue the savings, debase the currency, and you do not want to be holding anything that they can print.
Yeah, the next few months are going to be quite interesting for sure. And I just want to add to one point that you said earlier about how the economy is slowing down, and we're seeing ongoing evidence of that. So many companies that have come out with their Q2 numbers have said the US consumers just tapped out.
Yeah.
And so numerous airlines are taking hits because people are not flying, they're not going on vacations. Airbnb also took their numbers down, took their guidance down for the year because people aren't renting homes. I
Yeah.
also read something earlier about Burning Man. They can't give away tickets this year because people don't want to spend $500 or $1,000 going to Burning Man.
Well, you saw how it rained out. I mean, everyone got stuck there last year. That was not the best commercial, but no, you're right. I mean, people are not able to spend as much money. People are tapped out on their credit cards. We're seeing more auto loan delinquencies. We're just seeing the consumer say, I don't have enough." So that's not never a good sign. But again, on the flip side, what are they going to do when they print? Your savings is going to be diluted. Your purchasing power is going to be eroded. And so you need to do something about that. And the average person, unfortunately, we don't have proper financial education to teach people what they really need to do. And it's a system that has theft baked right into the cake at the core of it, that they're gonna steal from you through money printing, and you have no say in it.
All very good points. And I want to say I always enjoy our conversations. And as we wrap up, Natalie, you're very active online. If somebody wants to follow you online and read some of your content, where can they go?
Sure. So I produce a podcast called Coin Stories. It's on YouTube and every podcast platform. I also share the episodes on X. My handle is at Nat Brunell, and my website is talkingbitcoin.com with additional resources. So thank you so much for having me.
I'm a subscriber, by the way.
Thank you.
Once again, thank you.